Wow, that's really interesting to know that even banks are using this. So,
By the
sorry, go ahead.
billions, by the billions. Yeah.
By the billions. Okay,
Yeah.
so you've heard it, everybody. Banks are using this vehicle by the billions, and we're not on. If you're watching this episode, you're interested in finance and making money. But a small disclaimer to get us started here. Do your own research. This content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find in this episode, whether for the purpose of making an investment decision or otherwise. Phew, that was a mouthful. Well, now that's over. Enjoy the show. Peter, welcome to the show. Connect the dots. It's so lovely to have you here. How you doing today?
I'm doing really good. Thank you for having me, Alexander.
Awesome. So for those of you who don't know Peter, Peter works in the finance industry, and he's going to help share today his journey on how he transforms debt and makes it work for us. So Peter, without further ado, do you mind telling us about a little bit about your story and what you do?
Yeah, absolutely. So my story is really about, it's a journey of like really just doing the right thing, right? That's where I came from. I got a job at a big tech company in sales and was in that industry for upwards of 20 years, just going, I spent 14 years at the first company and then doing year after year, just doing changes to different companies and realizing that, um, I just, the company wasn't going to solve my problem. I really had to find it in myself. And, once I left, got rid of the biweekly paycheck, I think was the most freeing thing for me. It allowed me space in my mind to be able to find and truly find my passion. I found that when I came out, I was pretty much a blank slate in terms of I didn't really have a lot of creativity. So I've been working on that the last few years, and it gave me space to start just learning. Right. I tried to go back to school, take like different things like CMA, CPA, all these things, and just I couldn't pick up a book longer than 30 minutes without kind of falling asleep. And once I left corporate, it just kind of flowed. I picked up Rich Dad Poor Dad again, started going hardcore into that in real estate investing, and then going to what I do now in terms of the infinite banking concept and using that as a process to take control of the banking function in your life, which we can go into a little bit deeper on in the conversation. And then finally, just mindset, right? Like having that as a core piece to the whole journey, right? I think that was probably the biggest piece that was missing for me in terms of just understanding myself and being able to understand how I can serve others.
All right. Thank you for that. And so I think this concept of financial freedom is something I think, especially nowadays, it seems so foreign because of all this COVID stuff, and just figuring out ways to make money work for you. So I would love to know your take on what's the first step that someone can take if they wanted to achieve this, making the banks work for them and achieving financial freedom.
Yeah, for sure. I think sometimes it just comes to very basics in terms of, look at how you're spending, right? Don't spend more than what you make. Those are obvious pieces, but like that's something I felt like I was doing, but it also comes down to the biggest problem that I solve every day and what I do is really the banking function and how people bank, and they don't realize how much money they're losing through that system. One is there's two parts of the problem. One is um, the money you borrow. So people think that you're paying, oh, I'm only paying 2% on my mortgage, or I've got a car loan that's at 0%, or whatever that may be. But if you look at overall across all the money that you borrow from a bank, a lending institution, the volume you're losing is 34 and a half cents of every dollar. That's a massive piece. The second part of the equation is the money that you spend in cash. Once you spend that money, it's gone forever and you've lost opportunity to earn interest on that money. So that's the problem we solve. We capture that in your own banking system. So if you're losing 34 and a half cents of every dollar and you're trying to save 10% to get ahead, even if you made a massive return on that savings for investment, you'll never catch up to what you're losing out the back end through the banking system. So that's why we concentrate on focusing on controlling the banking function in your life to not only save money, but also to use it now, right? So it's not just about saving for the future. It's, you have more of a need for money now than you do when you die.
Right. And I think that goes back to the point of, value now or money now is more valuable than money later, right? Taking inflation, all that into consideration. And so to get started on this path, I mean, yes, we can look at where I'm spending, but if I have some money, say I had, I don't know, $1,000, for those who are listening, if you're coaches, if you're entrepreneurs, you have some excess cash flow and you want to make that money work for you. I would come and find you. And what would that look like if we were to work together?
Yeah, in terms of working together, we really need to understand a person's why, what they're doing, what their objectives are, whether or not it's in their personal life or in their business, and be able to create a system that allows them, like people say, "Oh, you're a financial advisor," but I would say, we're almost like an anti-financial planner or that type of thing. We don't concentrate on the investment piece. I think there's lots of opportunities to learn about that outside. We concentrate on focusing on the banking function, really being able to help people solve those problems, whether or not it's debt recapture. So taking on debts you may have at a bank, recaptured in your own system, and then pay yourself back. It's total mind shift, right? That's the thing. So we work with people who really want to invest their time and educate themselves in terms of doing that. So that could be debt recapture, could be having more access to capital for investments or to pour back into their business. Um, but while you use that money, it's still growing in the asset that you've deposited in the first place. So that's kind of the mind shift, right? It's not like you go and save up cash, and once you spend it, that money's gone. We save it in an asset, and we leverage that asset to be able to use it. And so that asset's still growing while your investment or whatever you've put that money into is still serving its purpose.
Okay. So I think this is all great. This sounds awesome to be able to take my cash and make it work for me. But I would love to paint a picture for the viewers. For me, I'm kind of a visual kind of guy. And so I think it would help hit home what we're trying to do here. So say, for example, I were to give you, I don't know, $5,000, right? When I hand that over to you, I guess through e-transfer or credit card or whatever it is, where does that money go and how can I have access to it so that I can actually use that to pay off debt and use money at the same time? Because I'm not seeing that picture quite clearly.
Right. Okay. So you're not giving the money to me. You're putting it into an asset that ultimately you control and you own. The product we use, so there's two parts to it, right? One is the product, because anybody can sell your product, but really what we sell, more than not sell people, but help people on the process, right? Because that's so important. The product we use is a very specific form of life insurance called participating dividend paying whole life insurance, and it's been around in Canada. Some of the oldest companies been around for 173 years and have paid out dividends year after year after year. So we're putting in an asset that has all the attributes of a banking system, but be able to use it for yourself. You put the money in to that system, and so there's components to that. It becomes a unilateral contract with guarantees where you put that money in, and your cash value has to grow to the death benefit by the time you're 100. So think of you put in the money, all you're doing is you go to sleep. The next day, your cash value has grown, and the closer you get to 100, the faster it grows.
Hmm.
And so we're using the policy growing the death benefit, which actually accelerates the cash growth. And they said it's a guarantee that none of these insurance companies have failed, even through. So if we're talking 173 years, the ones that we deal with are only from 100 to 173 years old and have never not paid out dividends, which in turn helps the growth. So we've been through pandemics, we've been through recessions, we've been through whatever else. It's really a product that is adverse to politics, to anything else that's going on in the world, because the way that insurance companies are work or similar to the bank, they lend with security and have money coming back to them. And then in turn, how we use the process is the same way. We use our money in a guaranteed fashion and be able to leverage it and have it grow every day while we get to use it.
Nice. Okay. And so you're saying it's kind of like creating our own banking system. So when you say banks, I think of like TD, Canada Trust, BMO, all these big banks, right? So yes, they have customer service, which some of them are phenomenal. But to do it yourself, is it a very, self-serve kind of system? And how much fluidity do you have with your cash? Like say I wanted to gift my daughter or my son 10,000 bucks. Would I be able to do that through your system or through the system that you work with?
Yeah, absolutely. So I would say you would still need a bank for purposes of debit and credit to be able to move money through. The process of getting the money from the insurance company is super easy. Send in a form, they send it back to you within a couple of days. No credit checks, no, there's not all that extra information needed where you would typically have to at a bank, right? Because it's your money, you own the contract. Then that's it's maybe one extra step in terms of just, you might have to wait a couple of days to get the money, but once you have it in your account, it's ready to go, and you can certainly do whatever you wish to with that money. Um, the idea is there's two parts of the process. One is you borrow the money, but also because it's a bank. So think of this: if you borrow money from a bank, right? You go and you're like, you have no problem paying back the bank principal and interest all day long, right?
Hmm.
So the second part of the equation when we talk about is when we borrow money from our own asset, shouldn't you want to pay back yourself and your family principal and interest? So that's kind of the mind shift that we get into is to keep that system growing, sustained, and to grow forever. You need to have that mindset of if you have your own bank, why would you not pay back yourself principal and interest as well? So you have to be mindful of that. And that's where we have to really work with people on that process to be disciplined, to help them. Every dollar you put back into that system, you get to reuse it anyway. So why wouldn't you put it? It's your money has to sit somewhere. So why wouldn't it put it into your own system?
Right. Neat. And so now I'm curious to know, what does it take for a minimum to start working with this system? And what kind of expectancy can I kind of look forward to say that I want to hit financial freedom by the time I'm, I don't know, 40, right? Do I have to put away 100 grand now and let it sit for a bit and say, okay, I'll be good by 40? Or could it be less?
It depends on how old you are, I guess. But yeah, I mean, you look at it and, if you put $100 in a bank per month, it'll grow to $1,200, right? If you put $200 in the bank per month, it'll be $2,400. So certainly the amount that you put in will relate to how much you can take out. Um, but in terms of building for your specific need, that's what we have to work with you on, right? Because some people have needs to pay up debt right now. Some people are looking for passive income um, when or if they retire, right? So there's different pieces, but doesn't preclude you from using it now. You can put money in and borrow money right away, right? Within 30 days of putting your money into the policy.
Right. And is there kind of any penalties that come with it? Like say I want to over borrow, or can I borrow more than what I lend? What is that like?
Yeah, you can borrow up to 90% of the cash value that's in the policy, and there's no penalties. That's the idea, is that you have ultimate control over that. So as you are borrowing, you're borrowing from the participating pool of the life insurance company. And so there is interest, and any interest you pay will go back to the participating pool. But at the same time, because there's a life insurance policy which is tied to to you, you never have to pay back the interest either, right? So there's not a plan of, I need to pay back monthly, I need to pay back this amount a year. You are in ultimate control in terms of how you want to pay back that loan, whether or not it's, monthly, yearly, what rate, how long you want to amortize that over, or if you're in times like this, maybe some people can't afford to put money back in to their policy, right? So, let it slide for a few months before you get back on your feet and start putting it back in,
Right.
knowing that when you put dollars back in, you'll be able to take dollars out again later on.
Okay. It sounds pretty fluid and sounds really kind of like a unicorn thing. Like, I mean, not many people know about this, I'm assuming. And so really that's what we're trying to do is here to spread that message of, you can take control of your money, right? Um, and so going back to the point of what do I need to get started? I mean, maybe I need $100, maybe I need 5,000. What does that look like for the average Joe who wants to start on this journey? Say he's 25 and he wants to start working with your services. So how does that work?
Yeah, so maybe it is someone. I mean, we would go through the needs analysis in terms of what objective they're trying to accomplish, right? So that would be the first thing. And then depending on where you're at, if it is, we get into why I say that is just everybody is coming from a different place and is going to a different place. So that's what we need to understand. I know how you're set up, what your objectives are. If it's paying off debt, then we might have different focus in terms of how we would use the money, right? So taking it out and paying off loans. So think of you have a loan with a bank, and think of like paying down a structured loan versus a line, right, which is unstructured. And those are two different types of loans that we can help people recapture. We would probably focus on getting something that's structured, because a structured is a fixed amount with a fixed amount of interest, whereas a line would be something where we can just pay down minimum interest, build money in our system, and then lock down big amounts. So you're minimizing the amount of interest that you're losing or paying out to the banking system.
Hmm.
Um, and so someone 25 may not have a lot of debt. Maybe they have student debt, but maybe it's just living expenses. So it's ways of capturing money to be able to use for monthly expenses, whether it's rent or groceries or whatever that may be.
Right. Okay. So let's fast forward to a few years ahead. Say you're in your 50s and you own a house and you have a mortgage with one of these banks, I don't know, one of the big banks. Could we potentially take that mortgage? Well, I'm assuming you have to invest the money first before you use the money, right? There's no lending here. Okay. So whatever money you have, you can potentially pay back your mortgage with the interest that you make. Does this make sense to you?
Yeah, you can certainly use it to pay down. As you said, the volume interest that we lose to the banking system is pretty massive. So a mark, I would say a mortgage is a it's like taking on an elephant, and you don't do it in one. How do you take down an elephant one bite at a time, right? So yeah, it takes time to get through that to be able to fire the bank in your life, right? So that's where we'd have to work through a process to understand how you're financially set up, what your cash flows is, so that we can pay it off in a way that doesn't impact your daily cash flow, but allows you to use it to your advantage to pay down debt and take control of it to yourself.
Right. Okay. Nice. Thank you. And so, in your experience, what kind of transformation in your life has this created? And is this something that someone can use to maybe quit their job one day and sit down and wait for the passive income from this growing vehicle to fund their daily lives?
It could be something in the future that you may want to use when you retire for passive income. I would say think of it as a bank, though, right? So it's not going to be your all out income stream per se. That's not how I use it, anyways. How I got into it myself was I was pretty deep into real estate. I was having issues of getting access to capital. You go to the banks and they have to, all the information you need to give them, or they might just kind of tap you out at a certain point, right? So that's helped me in terms of become a better real estate investor. And that's my form of cash flow. That's one of the forms of cash flow that I have coming in, is through my passive investments. In addition to what I do today, being a practitioner of the infinite banking concept. And so I would say you want to have, same as any kind of business, you want to be able to feed this business to capitalize a business to help it grow before it really creates that steam, has that flywheel effect of growing much faster than the amount of money that you put in. He said it'll compound over time. The longer you let it compound, the better it'll go. But I'm not saying don't use it now, because people need money now, not when they die per se.
Um, so I think with all this information is super useful and someone's interested to work with you, how do they get in touch with you and what do they need to do?
Yeah, I think for me, it would just, we would do, there's a couple of things is there's such a learning curve to it. I can certainly provide any information in terms of just getting a baseline to it. I mean, even in a quick conversation, it's really hard to cover off. We have webinars that I can send through, podcasts, anything like that. I have books on it as well. That depends on how people learn. Everybody learns in a different way. I find some people are more visual, some more through audio. But I would say just reach out to me at Peter at cashflowcanucks. .ca, and from there I can step them through the process to understand how they learn and be able to get that information out to them. And then from there we can do, typically we do is just one session just to give you clarity on the process, because it is such a mind shift. I think if that's really the hardest part, is overcoming kind of all the stuff that we have built up in our mind in terms of, not that we don't think, but things that we've done for generations that just are kind of built into the process. And you don't think, well, I have no problem using the bank, why wouldn't I? But if you realized how much money that you were losing in your life that was going out the back door, and the banks are making, well, we know they're making billions of dollars off us, right? And the ironic part is banks are the biggest consumers of this product too. And they wouldn't tell you, right? They want all your money in GICs and equities, all those other things where they're guaranteed to make money off of, but we're not per se, right? At least on the equity side of things.
Right. Wow, that's really interesting to know that even banks are using this. So
By the
sorry, go ahead.
billions, by the billions. Yeah.
By the billions. Okay,
Yeah.
so you've heard it, everybody. Banks are using this vehicle by the billions, and we're not on it, or a lot of us aren't on it. So it may be time to look into. If you're interested in working with Peter, I will leave all the descriptions and the info in the links and everything below. And Peter, I just want to say thanks for joining us. It was awesome. And I look forward to seeing what comes out of this and if people are going to reach out to you.
All right. Thanks, Alexander. Appreciate it.
Great. Thanks, Peter.
Okay. Take care.
Bye. Hey guys, Alex here. Thank you for stopping by my channel. If you're a coach, if you're an entrepreneur, or even a creator, you've come to the right place. Here we talk about creation, we talk about business, and we talk about coaching. And I'm creating all these resources just for people like yourself so that you can up your game and make your business even better. If you really like this content, make sure you hit that subscribe button below right here and that notification bell so you know exactly when my next video is going to be released. And if you find it useful, share it with somebody that you know, like, or trust. So have a great day, stay amazing, stay blessed, and I'll see you guys in the next video.